Welcome to Lesson 5 of our class on tax preparation, Part 2. This week we have 2 pages of readings. First of all, non-liquidating dividend and distributions on page 17 of the text. And we also have reading earnings and profits on page 18. Our lesson activity includes 4 discussion questions. We are to discuss the lesson, the purposes, and charging alternative minimum tax, purpose of the tax, and charging it. Number 2 would be discussing the formula of adjusted current earnings, ACE, adjustment calculations. This, of course, is from last week's discussion. Number 3, discuss the qualifications of small corporations exempt from the corporate alternate minimum tax. What would be the size either in sales or in assets? Could be either. Number 4 and final, discuss how earnings and profits, E and P, of corporations affect the non-liquidating distribution. So this, of course, is from this week's study. Let's take a look at the 2 pages that we're going to read in the 2 topics. First of all, non-liquidating dividends and distributions. They can be in the form of cash, property, or stock. And there are headings on the reading for each of these. We have 2 columns under each heading. For instance, under cash, we have corporation and we have SH. All right, SH, I'm not clear what that means yet, but maybe we'll come across it. Non-liquidating dividends and distributions. If dividends are paid out in cash for the corporation, there's no effect for tax purposes. Earnings and profits are reduced by the cash distribution amount. Very simply, this is standard double entry bookkeeping knowledge. Under the SH, dividends income is recognized up to earnings and profits. Any excess reduces the shareholders' risks, or shareholders' basis rather, and the excess is called capital gains. So the SH must stand for shareholder, which makes perfect sense now. Property is treated differently. Stock distributions, sometimes we can pay, instead of a cash dividend or actual property, the company might just issue new stock or additional stock to a given set of stockholders. And again, how does that affect the taxes for the corporation and the shareholder? If no gains are recognized, corporations and shareholders would be escaping gain recognition permanently, since the basis of property is full market value. This is a note appended to, looking up here, one of the entries, not obvious which one it is yet. And then below there, another second footnote, no loss recognition under the conditions listed, and we'll take a look at those in class. And that concludes the first reading. Second reading, earnings and profits. Current earnings and profits are similar to book income, but they're computed by making adjustments to taxable income. Accumulated earnings and profits represent the sum of prior years' consolidated earnings and profits. This is abbreviated CEP. Recognize that C stands for consolidated. Profits reduced by distributions and net operating loss of prior years. So if we have losses we're carrying forward, this will affect it. If we've paid dividends, this will affect it. We have 2 alternatives here. First of all, R/E, and second, earnings and profits. R/E is going to be revenue and earnings. All right, we have beginning revenue and earnings. We add net income. We subtract dividends, and we have ending revenue and earnings. Under the earnings and profits, we have beginning earnings and profits. We add taxable income rather than net income, and we pay out dividends. We have ending earnings and profits. It's a rather small distinction, but significant for the tax purpose. Accumulated earnings and profits versus current earnings and profits. They must look in two folders, I think they say, and take from the current year earnings and profits first, then from the accumulated earnings and profits. And below they give an example. Secondly, a continuation of the same topic is constructive dividends. These are, first of all, they're not called dividends, but essentially they are. Corporations sell to shareholders property for the price less than the full market value. The sale price is what we call a constructive dividend. So that kind of concludes our readings. Note the learning objectives. We have 5 of them in this lesson. First of all, to define the alternative minimum tax, which we've done already. Secondly, describe the alternative minimum tax formula, which we've taken a look at. Understand corporations' exemptions from the alternative minimum tax. We've looked at those exemptions. This is all material that you wrote in answers to lesson 4. Define non-liquidating distributions, and that is from this lesson. And lastly, understand the constructive dividend. And for this purpose, we'll need to probably do a little bit of Googling research to get a clear definition, since the reading does not provide that to us. This moves us into the second half of the term, so we're rapidly closing in on a finish. I see that you're all doing quite well, and again, congratulations. Keep up the good work. We want to finish this with good grades and move on with our lives and apply some of this information successfully for the profit of others and, of course, ourselves. Goodbye.